Perfect. We'll give everybody just a quick moment so they can get in here. So we can talk for a little bit while we wait on them. Doing pretty good. I think I sprained my ankle though earlier. I was playing basketball. A few words about this drop, we'll talk about it. The orange man completely threw off what we wanted to see, but it's all good. It just delays the process. Does TPD stand for time price divergence? No. I don't think I've ever talked about the real name of TPD. Friday closes manual intervention? Yes. Trump released some tariffs with Canada and Mexico, I believe, and then the market just did not react nicely. But in the morning, we had everything going towards our bias. That's when the algo was in full play. But nothing there really of substance intraday to kind of go with it. This gap down is the biggest since February 22nd, 2022. Yeah, man, it's like the Wild West out here now. Since Trump got back into office. Holy. This shit is looking like meme coin charts now. So you didn't think the bullish daily SMT on Friday was of substance? Just because the Dow kept on continuing dropping, it was a low probability SMT. Now, while yes, it did react, it just isn't something you per se like to see. It did tip a tan, but it's not the best case because that's what I'm pretty much outlining for you guys is best case scenarios, exactly what we'd like to see. High probability scenarios, that's whole deal. Not things that happen once in a blue moon that somehow work. Something that's repeatable. That's what I'm trying to get you guys to see. All right, so we are going to go ahead and get started. So we are looking at the weekly time frame. We have the Nasdaq, the S&P, and the Dow. And as you guys can see, we have this weekly TPD right here. Now, I would like to see this act as a continuation TPD. And if it plays out, which probabilities are it could go either way, but I would like to see this act as a continuation TPD. And as you guys can see, upon this release, and what did I tell you guys last Sunday? Always wait for the opening price of Sunday before you do any analysis for the week ahead. That is extremely, extremely important. Because as you guys can see, what do we have? This is candle 2, which would be the TPD. And now we have an SMT between the S&P and the Nasdaq. So if this holds, this weekly TPD with this SMT, and this drop, which is manual intervention, and then it runs up and cleans these highs, then you guys know that this is how the market operates. Now, like I will say, it is 50-50, but if this if this plays out, then you guys see it now, you know. And it's important that things like this in the market take place. These random, I'll say quote unquote random things. Because it forces you to take a step back because you're not going to get it right every single time. That's unrealistic. Now, while you can trade with a high degree of accuracy, you've seen me do it. You've seen me call the markets with a high degree of accuracy. It's important for things like this to take place because it induces more liquidity. And that's all I'll really cover on that. But even though we had this huge drop, we could still see what I would like to see is still a bullish setup form come by around 8:30 to 9:30. We could still see that bullish setup form and then return back into this gap. I completely forgot about doing this. But here we have the economic calendar. I should have done this at the beginning. Got distracted. But we have news every single day of the week this week. Whenever you have this typically happens on non-farm payroll weeks. Now, regardless of the news earlier in the week, you can still expect Thursday or Friday to form the high or low of the week. So Monday, Tuesday, Wednesday, we could see the high or low of the week forming earlier on. And then once we have that in place, then we would look for it again, come by Thursday or Friday. More than likely going to be Friday. Monday and Tuesday have 10 a.m. news. They might be a little bit more difficult to spot something just because whenever a trading day only has 10 a.m. news, it tends to be a little bit more difficult to navigate. You have to wait a little bit longer for the market to tip its hand. But Wednesday should offer something in the morning. And then Thursday or Friday, if you're new and you aren't really too advanced, then I recommend just sitting these days out and just waiting for something clear to tip its hand, because generally in the first week of February, non-farm payroll will clear out something and give clarity to the monthly range, which you guys have learned that in the core content lecture that was posted last night. So now that we got that out of the way, we can do some Q&A. Is everybody on the same page? Do PSPs and TPDs need to respect the true open and the premium and discount? Yes, preferably yes. Long this right now? No. Just wait. Be patient. What are the factors considered for the bullish bias? Would like to know the points for your confidence. So this is a very consolidative, choppy, pretty bad market. But due to this weekly TPD, and now that we have this SMT form, as long as the NASDAQ, doesn't trade below this low right here, then my bias still is in play. Because and you guys have seen this, since I get it right so many times, and that's not to brag or anything, I tend to stay with my bias until I'm like really, really proven wrong. And then once I am really, really proven wrong, that's whenever, I take a step back, take everything in, see everything at hand, and then come to a new conclusion on where price might draw. But unless NASDAQ trades below this low, then my eye still is drawn to these equal highs. Can you use the monthly candle in terms of premium and discount sequence for monthly SMT? Yes, but in a different way, and we will get into that. Weekly TPD, monthly cycle, so we should see either a weekly cycle or daily cycle, correct? Yes. We always need two cracks and correlations for reversals. Can both crack and correlations be on the same time frame, or it should be a higher time frame and the second on the lower time frame? They can be on, so if this does play out, then yes, it would be two monthly SMTs right here. But as you can see, looking at the chart, this isn't really preferred price action. This is, and January, like I said, January tends to hold this characteristic right here, So February, once the month develops a little bit, we should see a little bit more clarity. But you generally want it to be on a higher time frame and lower time frame aspect. You mentioned that tomorrow we should see something from 8:30 to 9:30. Are you referring to daily sequential SMT? Yes, and or a TBD. Barcode. Yes, price does look like a barcode. You reckon Monday and Tuesday are high probability? In non-farm payroll weeks, Monday, Tuesday, and Wednesday are the highest probability days of that week. After how many times an IFVG has been filled and used, would you consider it no longer usable in future scenarios? So the only time you should really use fair value gaps, inversion fair value gaps, things of that nature, is whenever you have a true reversal. So let's say, I'll keep that red. And now I don't have to draw it out as much for you guys since you guys have been here for a little bit. But imagine this is the higher time frame SMT that you're working with, and this is the lower time frame SMT that you're working with, confirming that higher time frame SMT. Soon as you get a leg that pretty much confirms those SMTs, that is whenever you can use that inversion fair value gap or standard fair value gap. And you want to see price drop into it, respect it, and then continue the narrative of what you've established. You wouldn't really like to see price use a fair value gap, come back up, use it again. You don't want to see that. You want to see it drop into that fair value gap and then bang, continue the run. MMXM, yes, that does play a part with what you guys will learn in the reversal model, which is coming out this month. Which I believe the only person that, I think a couple of you might have figured it out a little bit, but I think the only person that completely has it right now is just the assistant. Well, no, I'd say 80%. And he's used it personally. It works wonders. They told us if we have a weekly cycle SMT today, then we don't expect another weekly cycle SMT tomorrow. Is this principle only for the weekly cycle or for all of the other cycles as well? It's not preferred. You want to work within the narrative of that higher time frame and lower time frame cycle, but it can. It's just not preferred. Would you consider the last week monthly SMT with Dow taking out those highs and Nasdaq and ES coming into premium of the previous week on Thursday and Friday, as mentioned with the Dow for bullish monthly last week on Tuesday review? Yes, so since, and yes, we draw this out. Yes, so the Dow, and this leads back to another thing. The reason why I want to see this act as a continuation TBD is, yes, all of them are in premium, all of them are above the true open, but which assets have a cracking correlation, a new cracking correlation that just formed? The S&P and the Nasdaq. I care more about the intermarket analysis between the Nasdaq and the S&P than I do the Dow compared to all of them, if that makes sense. So since we do have this now, that's what I'd like to see. See this as a continuation, especially since this is a gap. So the Dow is just a little, can act, I mean, it can take the low, form an SMT, but it's making an SMT within the gap, which would be even better for what we would like to see. And would you wait for 10 o'clock news to drop before looking for anything? Generally, with 10 o'clock news, it'll act as distribution. Especially if 9:30 expands, and you guys can go back to this with what I'm about to say. Whenever 9:30 expands and there's only 10 o'clock news, if 9:30 forms a 15-minute fair value gap that looks like price will not be trading back into, and it's certainly one of those. It's one of those fair value gaps that it's one of those fair value gaps like this. The ones where price expanded away from it already. You don't expect it to get traded back into. Yes, you'd want to see it act as a breakaway gap, but then that news releases and then wicks into it before continuing. 10 a.m. news has that characteristic. Would you say Monday is the best day to skip? And you think you should only trade Monday when there's SMT between Friday and Monday? If there's news on Monday, it makes it substantially higher probability, not 100%. But as long as you guys have an SMT and a TPD, or an SMT and then a lower time frame SMT, then you can find something to do. Your thoughts on the monthly TPD between Bitcoin and Ethereum? Waiting a little bit longer. But yes, we talked about this before and we got what we'd like to see. I've noticed that in the time frame, each time or in each time frame triad, each time frame will give a cracking correlation. Some TPDs that form are used as manipulation Judah swings. Then price will form an SMT to reverse. Do you agree with this? Yes, sometimes that can't happen. And that's why narrative is extremely, extremely important. Are we really still expecting higher prices? All markets have made quadrennial cycle SMT, bond, yield triad, crypto triad, and the CFDs, or am I missing something? So yes, while the CFDs did make an SMT, I more so see that as SMT market structure shift. I still, because the index futures triad is designed to be bullish over time, so it'll take a lot. And yes, while there is a lot, something like this could be enough to tip its hand and completely wipe all of that out. But in validation level, like I said, is this low right here. If the NASDAQ, say overnight, the NASDAQ comes and trades below this low, then in the morning session, yes, there still can be something to do. Just higher time frame perspective, we would have to sit, wait it out, and we wouldn't expect these highs to be immediately ran. But as long as this stays in place, that's all I'm looking at. Do you use internal range or external range to internal range concept? If so, how to combine with QT? Yes, and that is what I'm kind of teaching you guys already, which the continuation model is derived of that. And don't worry, you'll get it. Do we trust CFD triad or futures? Futures data is the real data. the CFDs mimic the CME data. They're market makers. If you look at the science behind it and actually what goes on behind the closed doors that people don't really look into, all the CFD data is doing is pretty much mimicking this. So in my eyes, this is the real data. Price never expands before the 8:30 news. Most times it always comes out, then later in the session it gives more. Yes, because at 8:30, that is the volatility injection. That's whenever volatility is injected into the marketplace to actually provide that movement later on. We should expect for tomorrow weekly cycle SSMT or daily cycle SSMT is supposed to support bullish bias. Yes, the best case scenario is Monday, even if, because drops that happen like this, more times than not, Monday just doesn't continue dropping down the entire day. More times than not, price will rebalance itself and then consolidate for a little bit. So even if the Nasdaq overnight runs below this low, there's still an opportunity for it to rebalance itself in the morning session. A TPD that is a fair value gap, would you say sometimes they don't get filled? Yes, whichever asset is strongest in the direction, that is typically the one that will not fill a fair value gap that forms off of a TPD. Which is more important, to respect the true open or the advanced premium and discount? The advanced premium and discount, because every single quarter is quote unquote a true open, or every single quarter's opening. As long as the Nasdaq can stay above this high and form a second stage SMT, then that is enough for me. But if overnight or in the morning we take out this low, that's whenever I will take a step back, reanalyze the situation, especially in these conditions. This is crazy. I'm even surprised that we called majority of these price swings leading in January. It was crazy low probability, but not impossible. Is there info on the different quadrants of the advanced premium and discount? Are you talking about doing this right here? Yes. There is substance to that, and you already know how to identify. Well, we're not going to cover it yet, but you already know how to identify which asset is the strongest. Whichever asset is the strongest for continuation, use. God, do I even want to say it? But yes, what you're talking about, yes. Whichever asset is the strongest, you can fractalize the advanced premium and discount. Whichever asset is the weakest, you would expect it to retrace it deeper. Will you teach us about the defining range? I personally don't use the defining range. I don't it's too discretionary, and price is going to form what it wants to form at certain levels already. So I guess it can't. Think about the defining range as like training wheels. Even then, it still is very discretionary, and it's not that repeatable in my eyes the way that Day spoke about it. I know everybody on that side of the thing is like, oh my goodness, the defining range is crazy. I don't really see much benefit in it. And yes, the quadrants of the advanced premium and discount, yes. Is a partial SMT and non-symmetrical SMT the same thing? No. What is a partial SMT? A partial SMT, or a partial sequential SMT, would be let's say this is the previous quarter's low, but price forms an SMT with this low, and it wasn't the entire previous quarter's highest point or lowest point, which would be the highest high or the lowest low. It was just a higher low within the previous quarter. That is symmetrical with all the other assets. This would be a partial sequential SMT. A non-symmetrical SMT would be, let's say, yeah, we'll do it like that. Would be we have an asset that reaches that previous quarter's low on a lower time frame quarter, and then that next lower time frame quarter, the other asset then forms that SMT. So generally with SMTs, you want them to be bam, same time. So if you have one asset that forms, and you'll see this commonly with the Dow. So if one asset is trading higher while another asset takes out that low, and then let's say we have asset 1, 2, 3, you guys already know. One asset then takes out that previous quarter's low shortly after this one, but there was a delay. So where that next lower time frame quarter then takes it out. So it'll cause disruption, if that makes sense, and it'll be a little bit more delayed and lower probability to actually get a precise entry. A hypothesis I made, I think is a good one, is if you split the premium and discount sequence into quadrants, if one asset in the triad is ahead by one quadrant, for example, NASDAQ is in the second quadrant, which will be classified as being in premium, while the Dow Jones is in third, which would be seen as discount, we can say they're in sync, and if not, write off essentially, because it tends to be, or does it happen intraday, where one may just be making a deeper retracement, but if one asset ahead by making two quadrants, so we can classify it as being out of sync. For example, if the Dow is in the fourth quadrant while the S&P is in the second or first quadrant, then we can say they're out of sync. Yes, that does have validity to it. Very good observation. But anyways, Hopefully, you guys found this one insightful. We will be back Tuesday night to see if this low is still intact on the NASDAQ, and if what we'd like to see tomorrow morning pans out. But keep in mind, this is low probability price action, so nothing has to happen. These are the times, and yes, I know I've been saying this for a minute, price is low probability. You can see we are trading in a range. So these times are meant to test you. Just preserve capital, manage risk, be responsible. If you see your setup form, risk accordingly. Don't hold on to the trade too long. These are not like large play conditions, if that makes sense. So I will speak with you all again Tuesday night. Take care.